Um, and what we're going to look at in the webinar today is an overview of the program. We'll go into some detail on the data entry screens, and then we will look at reports and analysis and the different things that you can do with the program. What I am using here for the program is our new beta version of the software. This is actually going to go live on Friday. If you want to use this version now, you can go to beta at beta.flsgo.com instead of pro.flsgo.com. You're still going to sign in with your email and password. So the file that you're working on or creating will be available regardless of whether you use the beta or the existing pro version. And as of Friday, this is what you're going to see when you log in to pro.flsgo.com. And it's really cool. Most of it is the same. We have, instead of the tabs on the top now, all the menus are down the side, down the left side. And you can see here, enter data, analysis, reports, settings. And we now have a new file manager. I'll show you in 1 second. These menus you can collapse or expand, shrink or expand, so that you have more screen real estate. And once you get into the program and you're very used to using it, you can probably leave this closed because you'll know where to go. But I'm going to leave it open for our training so you can all see what I'm doing. The biggest new feature in this beta version, in the new cloud version, is File Manager. What this is going to allow you to do is, here's all your files. They're going to be under your name and all your files. And we have now the ability to put a case name so that you can sort by case name. And you can see I have 2 sample files, and then 1 Cliff file and 1 Carruthers file. I don't know why I made that name up. And then there are other files down here. These are all just sample files. You can see here's some other sample ones, but they don't have the case name. So at some point, I can go in and put in a case name so they'll all come out the same. Interestingly enough, I don't care because these are all just samples, not my actual client files. Now you'll also see that there are shared files. Shared files are for the ones that are started by the client. So don't know if you're using this or if you know about it, but we've always had the ability, or in the last several years, had the ability to send the client an email and allow them to start the data entry process. So they can go in and look at the data. What I will show you now is I'm going to open one of those data files. Oop, I already have it open, sorry. And if I'm going to open a new file, I can choose to make it a file that I enter data into. That would be a new file, or I can register the client for them to put in the data. And then that allows them to put in the information themselves, saves them time and money, saves you time and stress, so they can do that. If you have the firm cloud version, you will see all of your firm's files here. You can sort by owner's name, which attorney or staff member, licensed attorney was working on them. You can also see when it was modified. We also have the ability to look at the files themselves and either save, archive, or backup. Look at the backups of files. If you need to restore a file, if something happened, you can look at the history of a file, and it tells you everything that was done and how long Not that any of us ever mess up and don't write down what time we spent on a file, but this will give you a good way to capture that if you needed to. Kind of fun. And excuse me, and so I'm going to go into my files. Now, the other thing about the client data files is the client can continue to work on them, or you can lock them out once you start taking over the file and putting in, fine tuning it. You don't want the client going in and changing anything. You can lock the file so the client can't go in and mess it up. Okay, so now we are in a file that was created by the client data. And what I can do is show you now what the client's going to see when they start entering their information. They're going to see this screen, enter your information, with all of these different sections that expand and collapse. And they can just start entering the file. So everywhere you see a black circle with a white arrow, they can expand it, put in their information. And then when they're done with the section, they can mark it done so they know. And when they're all done, they will send you an email saying, I'm all done. So you as the licensed user will get 3 emails if you use the client data entry. You will get an email initially that you have sent them the link. So that's your record that you've done that. When they open it and start entering data, you'll get a confirmation email that your clients opened their file and started working on it. That's handy to know. Sometimes, of course, they've been telling you for several weeks, oh, yeah, I'm working on it. And, then you finally get that email and you're like, yeah, sure you were. And then you will get the 3rd email will be when they're done. And they'll click this done for now. You'll get an email to let you know. And then you can just start working in the file. So you can open it and start working in it. Now, when they enter the data, they make mistakes. It's never 100% complete and correct. When you gave them paper data sheets to fill out, they still didn't get it right. So it's much easier this way. What I like to do when I get their data is I immediately go and I produce 2 reports and I PDF them and send them to the client. So I go into the reports section. I go down to more reports. On the more reports page, there are 3 subpages. There are for lawyers, for planners, and graphs. Nothing wrong with lawyers using the planners page or planners using the lawyers page. We just divided them up because there's so many to make it easier to use. On the planners page, however, we have the capability of doing more than one report, at a time. And it will, when you PDF or print it, it'll be one document. So that's handy for our purpose here. I'm going to use report number 6, the budget report, which is also found over here on the left side, the budget report. This would be all of the income and expense. And report number 17, the property statement, that will be all of the assets and liabilities. So when they're entering the data, that's really what they're entering. So I will go into the property statement, and here I have all of their assets and liabilities that they've entered. And I can set options. So as you're learning the program, I would say 2 things. Number 1, play around and look at all the different reports we have and more reports. There are many that you'll say, oh, I don't understand that, or I don't know, I'll never use that one. That's fine. But you'll come across some that you'll say, oh, that's a really cool report. That's very useful. I'm going to use that one. And the other thing I want you to do is check out all the report options on each report. They will be different. They're sensitive, they're context sensitive, so they'll include stuff for this particular report. And when I look at the report options, this will not change any of your data, any of your info, but it will change what shows on the report. So I can include or not include things on this report. And so I've got title, I've got valuation date. We note here that they didn't put in valuation dates, except for I've got a valuation date on the present value of the pension. We'll talk about that later. And I look at this and I say, hey, I don't see any checking account or savings account here. I mean, there's a JP Morgan. It's not big enough for them to have a cash management account. So what's going on here? I may want to go and check that out. Now you will see that there are sometimes will be footnotes on the report. When the clients are entering data, they will have the ability to put in footnotes, and that is helpful. That'll be all the things that when you gave them the paper sheets, they would, make little asterisks and write on the back and down the sides and all the stuff that you couldn't read. Now it'll be in a nice typed report. So that'll be much easier to do. So you'll generate these two reports, send them to the client. You can put in your email to them, please review this, make sure it's accurate and complete. I noticed you didn't put in any checking accounts. Do you not use one? How do you pay your bills? That kind of thing. Because you'll need to know that at some point in your representation of them. So that's client data entry. Now, if I'm entering data myself, I like to start with assets and liabilities because there are cash flow items that come from, that are attached to the asset or the liability. So if we have a JP Morgan account that has income, then that income could be income that gets added for support purposes. But you have to allocate it. You have to say who's going to get that. So I can put that on Cherry's side, and then that $270 a month will go on her income, and it will also show up on the budget report. So if I go to the budget report, that $270 a month or $270 a year, $250 a month is going to show up on your report. Obviously, at $250 a month, it's not going to change any child support amounts, but we'll go from there. Oops. All right. So I just find it easier to start with assets and liabilities because I can at the same time enter the income or expense information. So if there's a debt, I might have the payments that'll show up on the budget report as well. Contributions to retirement account, I can put that in. That'll impact taxes and support. So you'll only have to look at something once. And remember that in the program, you only have to enter a piece of data once. So if you put in the amount of the investment account, it will then show up in the income. So if I go income from assets, and I'm going to go down, this little table here will not connect to the asset itself. So if you put the information here and you change who's going to get the asset, you have to go back in here and change where the income is going. So if you put it with the asset, then when you change where the asset's going, then it will automatically change who is being attributed that income or expense. So it's much easier to do it this way. Then I'll go to income and expense. Obviously, I probably start with the parties and the children, but that may have already been filled in if I did the client data entry. So as you're putting in information, you will see that we have the ability to put in footnotes. So footnotes are this little blue box with the comment bubble. If there is no footnote, it'll be sort of empty and just have the empty circle with the 3 dots. If there is something in there, it'll be filled in. So the circle will turn white. And when I have a footnote, I can put in anything I want in the footnote field. I can, you know, type it as much as I want. If you fill up the footnote field and you run out of space, then it really shouldn't be a footnote. It's too long. That's the rule about footnotes. It can only be so long and before they lose their value. But we have quite a bit of text space here. Now you can also mark an entry as estimated. So that would, for example, the value of the marital residence, you may have an estimate of it, but you don't have an appraisal or anything yet at the beginning of the case. So you're just going to put in that it's estimated, and then that will show up anywhere footnotes are printed, including on the financial form, affidavit form for court. You can also make the footnote a reminder, which will not print as a footnote. So you can put in private text here. You can say, double check this number, or boy, I think this is a bullshit, or whatever you want to say. We can all say that word now. It's been on TV. And when I save this, that footnote will never print with the other footnotes on a report, but there is a report for footnotes where you can see all the footnotes. So you can go to the reports section and go to more reports. And in the planner's page, it's at the top. On the lawyer's page, it's at the bottom, same report. And here you can see I have a reminder and a footnote. I can go into either one by clicking on the blue square. And here is my footnote, my reminder. I can take out the private text and change it from a footnote to a reminder, or I can do it the other way too. And now I have 2 footnotes instead of a footnote and reminder. They're both there. Back to the enter data. The other thing and so clients can put in footnotes as well. So you can look at their footnotes by just looking at the footnote report, or you can see them when you look at each piece of information, or when you print any of the reports. Now, this footnote is the blue square. You can click on the green square. That is for more information. And more information fine-tunes the basic information on the front page and allows you to put in more details. Some of it is state specific, some of it is tax specific, some of it is just more information about the asset that is going to come in handy later. So as you're learning the program, in addition to looking at the reports and the report options, check out the more info pages, because there's a lot of really good information. Now, more info is context sensitive. So what that means is, depending on where you are in the program, it will ask you information about that piece, that type of information. So for real estate, we have a whole bunch of questions about real estate. Do we want to talk about the value? Do we want to talk about the rate of appreciation? Do we want to talk about the mortgage? Is there a second mortgage? If there is not a mortgage, you can say no, and there won't be any information needed about it. If you do have a second mortgage, you can add the information about the second mortgage. Some of it will be for tax purposes. Is that mortgage deductible? And of course, they changed the rules a few years ago. So now Not every second mortgage is deductible. Not every mortgage is deductible. And you can see mortgage amortizations and all kinds of other information. Okay. And so all this context sensitive. Again, you only have to enter information once, and it will be used then in all of the aspects of the program. So you enter the parties and children, you enter the income and expense, assets and liabilities. As I said, I like to start assets first. We also have a separate page for pension plans, although it is also available in the assets and liabilities, and you only have to enter it once. So the cool thing is, so let's call this the IBM pension, sure. And now when I change that there, when I go into assets and liabilities, and I'm in the defined benefit section, the pension name is already changed because it's the same data point. It's the same piece of information. So you only have to enter information once, and it's used everywhere that it needs to be in the program. We do a value of the pension. We do a present value. If you go into the more info screen for the pension, we're going to ask you some basic facts that are needed for the pension valuation. And then there are two main variables in any pension valuation. The first is the discount rate. We use a 20-year T-bond rate, and you can go into the hyperlinks here to see our help and the information on the discount rate that we use. And also, the second piece of information is the mortality table. And we have 9 mortality tables built in. We have a little description of each one after we've listed it. We also can give you more information about all of those different mortality tables so you can make a more educated guess about which one to use. Obviously, unless you're an actuary, you don't have the academic qualification to decide. So this pension valuation is really for negotiation purposes and not for trial, unless you are going to hire an expert to testify to it. And then you'll get the pension value, but that's the value of the whole pension. What happens when it's not all marital, when some of it is community or non-marital? Then we do a coverture fraction. And so when you put in the dates, it'll automatically calculate the coverture fraction. And if you click on the link here, it'll give you the calculation. So you have an exact calculation of the number of days for the numerator and the denominator, which is very cool. And then you'll get a marital amount for the pension by using that coverture fraction. You can then say how that is going to be divided. And if you set the program, so the program will look at not just the current picture, but also do projections. So we can go out up to 50 years. So if you've set the program to go out enough years, you'll be able to see the benefit payments to both parties over the course of the next 50 years. And you can see that they don't start until retirement age. And then if there was a COLA, that would be built in as well. In this scenario, I didn't put in a COLA, but if I did, it would be able to be shown there in terms of what that benefit payment would look like with a COLA. You can see it's going up every year. So if you have questions, please feel free to either put them in the Q&A or the chat. Chat's probably easier because it pops up. I know to look there, although both of them, I guess, would pop up for me. And now let's talk about support. So when doing the support calculation, we have a couple of ways to look at it. We now have a quick calculation. So I would use this probably maybe if I'm doing a consult, or I just want a quick down and dirty, or I actually have a client without a lot of complexity to their situation. Seems to never happen for me, but you never know. That some people have them, have no complexities, where you're just putting in the children, the filing status, the income, and health insurance and childcare if they have it, and then alimony. And if you want, then you can go right to the child support worksheet, or you can look at the top of the page here. We have a running total of the child support amount. So here's your Connecticut child support worksheet, and these blue notifications are not going to show up on your printout, but they're for information purposes for you, and you'll see your support calculation. Okay. When I'm working, though, in a file, I'm mostly working in the complete page. This is all of the parts of your child support calculation, and this differs by state. So you can go in and now we put important stuff at the top, even though taxability of alimony is sort of old news now. So many people still have questions about it that we've kept it on the top for right now, because it's still taking people some time for that to sink in, I guess. And then there's the FMLA Connecticut tax that's at the top too. You want to include that or not. For the children, we then add a couple of other fields in here that are not in the quick. Are they both eligible age? Are they both children of the relationship? So here we've got a baby that's berries and not a child of the relationship. So if we're going to have a deduction for imputed child, you would add the other child there, say it's not a child of the relationship, and then it'll automatically start calculating for that child the additional information and give you that imputed child support amount. For wages and filing status, here we have the ability to put in more information, and we can also add other employers. You could do overtime, incomes over 4,000. So all of that kind of information. And then we also have wage-like income. So think of wage-like income. Wages, we know what that is. It appears on your W-2. It's your regular pay. Income from assets. Again, you enter the asset, so you don't want to put that here in wage-like income. But here we have some that would appear on a W-2, like bonuses, commissions, tips, and overtime, but also ones that would not appear on a W-2 might be government benefits or outside information. And that also gives you extra lines to put in information from other weird places or other non-weird places. You know, maybe we have gifts from parents, $1,000 a month, and I can mark that non-taxable. so that now it's going to add the tax. And you can see our running total of child support has now changed because I've added that information. I edited it over here. Sorry, wrong person. So now I added it and it changed the support amount because he's got some additional income. Taxable, changed it by a couple of bucks. Non-taxable, changed it by a couple of bucks. Okay. So we also have the ability in the program to calculate support arrears. It's fairly easy. You put in the amount of the obligation. If you have more than one obligation, you can click on obligation special situations, and it allows you to put in obligation 1 and add as many obligations as there are. I had one once where I ended up with 68 obligations because there were 2 trusts and there were 3 different sources of income. It was ridiculous. Okay. Okay, so entry of overtime. I can show you that. Bear with me because this is not my state of practice. I practice in Illinois, and we don't have the same overtime kind of information. But let's go into overtime. I can add the question mark here. Okay. Let me put it in here. Under wages and filing status, I can do worksheet for overtime hours. And all you have to do is put this in here. So number of overtime hours. Let's say our friend here, Barry, has 4 hours of overtime, 8 hours of overtime a week. Number of regular hours, 40 hours a week, and another 8 hours of overtime. And then the wages plus overtime income. So we can only add in 5. I apologize. I would know that if I was at, so I have to have overtime income is, I don't know. Give me a number. Let's say it's $200 a week. And so it added it in here to the overtime. It added 5 additional hours. So it computed 40 hours of $200. I'm sorry, $200 of overtime income for the 5 hours. So it added that 5 hours that you are allowed for 45 hours. Hope that made sense. I'm not too familiar with this calculation worksheet. I have to figure it out. I apologize. I know that it works. I just don't know all the ins and outs of it. Okay. And then we also have a form info page for the information that goes on the affidavit that is not the financial information that we normally collect. So there's health insurance and certification and so on that you would fill out here if you were going to be generating the affidavit. So let's go to that affidavit in the reports. So I showed you the support guideline worksheet. Now let's look at the financial affidavit, and it will have it all filled in with the information that you've put in to the file. If you find a piece of information that you say, oh, where did that come from? I can link, and it will show me the page of data entry where the information came from. So we can click any of these links, and it will take you to the data page where the information originated. So in case you have to make any changes. Now you can overwrite a number on the affidavit. So let's say that there's a piece of information that you've put in that you don't want to show on the affidavit, or that would be different, maybe health insurance or some other item. So you can overwrite this and it will turn red. It will just print. If you're printing in black and white, it'll just print on the affidavit like it's a regular number. But you will see that it's there. The original value still remains in the program. The data hasn't changed. It's only for this report. So I can just delete that overwrite and it will go back to the original data. Okay. Now, let's look at some other reports, unless you have questions about the financial affidavit. So everything should flow through. This particular file that I'm working with doesn't have a ton of information in it because the client just filled it out very lightly. Here's our little footnote. Remember, I typed in the nonsense stuff there. The footnote shows up right there with the information, which is very handy because, of course, we know nobody ever looks at the footnotes at the end of the document. So it will all be right there. And we have the ability to add a note to each section of the affidavit. So that is, I call them explanatory or exculpatory notes. So let's put in a note here under, let's see, start at the beginning. We'll go to the whatever the first step is. Here, gross yearly income. Okay. I can say this is an estimate. Jerry recently returned to the workforce. Okay, so it's going to give me the ability to explain, to tell the story behind the numbers right there on the page. So it's very handy. And I love that feature of this. I can put in, there's no documents, we didn't have the information, these are guesses, whatever you feel is appropriate to put in to the section. So we also have a report called View Edit Taxes. And what this really is, you can see I have this program set to go out, like 50 years. And this is a pro forma tax return for the current year, or you could go to any of these other years. If I go to 2027, all of the Tax Cut and Jobs Act changes in the personal exemptions are gone. It's already built into the program. And this allows you then to see what that taxes would look like at that time. If you have put in growth on income, that will be included here. So beware of that. A lot of financial planners use this. Financial advisors use this to do projections and to look at how a settlement might impact a party down the line. And we have a lot of tools for that as well. I'll go over those in our advanced training if anybody's interested. You can sign up on the website. So View Edit Taxes also gives me the ability to kind of double check the information. Did I put the tag, did I put this in with the right person? Oh, wait, it shows up on the wrong person because I goofed up. Never happens, of course. And then again, allows you to see the taxes, the deductions, the tax credits, the child tax credits, all of that good stuff. And it gives you the marginal tax rate and the average tax rate, which is very handy for looking at other tax purposes. in the program. So here's our marginal tax rate, and then our average tax rate, which is on all the dollars, not just the last dollars. The budget report we talked about already. This is the cash in and out, the personal profit and loss statement. And you can see here we have our little estimate, but it says EST there next to the number. You can also put in footnotes on this as well. And here's one of our footnotes showing them down the bottom. The next report here is the marital property division report. And we also have a marital and separate property report. There are options where you can change the report to show a simpler report. It's a little easier to read, but it's also not as detailed. These I call sort of the end result reports. This is what the property division is going to be. This is the actual. And now let's talk about how you would get there. How do you decide who's going to get what? So we'll go to the analysis tab. Well, there's actually a couple ways to do it. Let's start with the data entry. I showed you how you can allocate an asset by putting it in item by item, asset or liability by asset liability. But I like to look at the whole picture. So I'm just going to show you one other feature. If you're entering the data yourself, we have data entry options. There is a default of what's going to happen to an asset. Is it going to go 50-50? Is it going to go by title or no default? Now, this will not change anything already in the program. So when the client is doing the data entry, you can't do this, but you can set this for any new assets, or you can just go no default. So that's the first way. Second way is asset by asset. But the way that I like to do it is to see the whole picture. I go to the analysis tab. If you have the basic version, you will not have this capability. If you want to upgrade, let me know. And this will allow us to look at all of the assets. We have a nice little, I call this balance sheet on steroids. And it's a balance sheet you can't mess up. And you can move things either by percentage, and it'll automatically put the dollar amounts and the percentage on the other side, or you can do it by dollar amount, and it will automatically calculate the percentages and the dollar amount on the other side. So you can move things around till you get to the division that you like. And now I see that I've got a 49.3 to 50.7. It's not exactly 50-50. Let me see what that is. So in some states, that might be, $2 million for that little percentage of difference. Or it could be, something not significant. So I can show how far the parties are from 50-50. Or any other percentage if I wanted a different allocation of the whole estate. And I see here to give Cherry 50%, she needs another $4,500. So I could go in and move some stuff around to give her another $4,500, or I can leave that as an equalization payment to be paid as and when XYZ, whatever the terms of the settlement or court order are. I can also look at assets and liabilities by asset class. So I can do retirement and non-retirement. Excuse me, I feel a sneeze coming up. Well, sorry about that. Okay. And I can show a bar chart that would show me if there was anything not yet allocated, or I can show a pie chart that will just show the division of property. And it will allow me to then actually also show the equalization payment or not on this page. And I can move things around to get the percentage allocation that I want by asset class. Now, sometimes you don't know right away how you want to divide the property. You want to look at different scenarios. So we have property division scenarios page. This allows you to do side-by-side scenarios and change who gets what, or you can even change the values and say, what would this property division look like if the house was worth $300,000? I don't know, are there $300,000 houses in Connecticut? And what would that look like in terms of the split? How is that changing things? So you can do side by side, or you can do different divisions. So let's say that this would be giving the house to Barry as opposed to Cherry. What does that look like in the property division? And you can do side-by-side scenarios, as I said. Now, whatever is in the actual column right here is what's going to show up on that marital property division worksheet. And whatever the other scenarios are just scenarios. They'll save with the program, but they're not going to be the worksheet itself. So if I want to see what that would look like, I can swap, or maybe I've decided that this is the scenario 2 is the version that we want. I can swap for scenario 2, and it's going to literally flip those two columns. And now the 50-50 scenario is going to be the actual. And the one that was the actual is going to now be scenario 2. So if you're going to do a lot of that swapping, you definitely want to do the labels on the different scenarios so you remember which one was which. What did you change to get there? So this is a very cool feature. Now, sometimes you want to look at property after tax, and we do 2 tax calculations for this marginal tax rate at retirement, which is going to rely on those projections that we talked about and the assumptions built into the program and that you set. And capital gains rates. That's a current rate. So in order for that to work, you actually have to know the basis of the property, of the asset, so that you can know whether there's untaxed capital gain. But that's going to be built in here once you have the data. So here we have the IRA. I guess I don't have enough income in here, or I've equalized it. There, it's not showing that. Let's give this to one of the parties. No, we don't have any marginal tax rate showing up because, yeah. All right, let me do it the other way. It's not, I don't have that. This is a crazy file. I keep playing with it and changing it. So let's add a tax rate here. We'll just make it 20. See, it turned red because I changed it. And now I have something wrong. I probably have something wrong in this data that it's not taxing it. Oh, I think I set it as a Roth. That's why. So it's non-taxable. Oops, I was playing with it with another training. So, but here you see on the pension that we have the taxes built in, so you have an after-tax value. And they're different for the two different parties because they have different tax rates. So that is very helpful. Now, let's say you want to look at alimony. So we have several ways of looking at alimony. First, we start with an alimony break even. If you have put in all the income and expense, it will figure out what the person needs, the recipient needs to break even for alimony. And here it says she needs $743 per month. So you could start out with that as your number. And what would that look like? So you can go into the support, enter data, support data, and at the bottom of the page is alimony to use. So when we go there, we could put that number in. And now if we go to our analysis and go to the support impact, it should be that we've got the support amount. I think that was the right amount. And they come out even, almost even there, $20 short. So that's one way of doing it. Another way is to go to meet recipient need. And here, again, you can do side-by-side scenarios with different amounts in the amount that the recipient needs. And this is for after-tax income. And it will figure out then, based on the income that you've put in and the expenses, what they need in alimony to make up that after-tax income. And then you can see either a short detail, like we just saw in the support impact report, that's just got those few lines, or we can do an expanded report. I know Connecticut many years ago, a lot of people use FinPlan. This expanded report is sort of based on the FinPlan model of report. It gives you more detail on the information. Okay, and then we also can do balance incomes. And here again, you can do side-by-side report, and we're looking at the percentage of after-tax income to each party. So all you have to do is put in one side, and it will automatically calculate the other side of that equation, and give you the amount of support needed to reach that split of after-tax income. So again, you can do side-by-side scenarios. These two do not have the swap feature like we have in the property division, but then all you're going to do is when you figure out what your number is, you're going to go back to enter data, support data, and we will put in the amount right there in the amount and duration of alimony. And then do you want to include it on the affidavit or not? And again, if it's taxable or non-taxable, you put in the duration. Now we also have present value on alimony. So because alimony is non-taxable, we're really only looking at the variable of pre-tax interest rate or the discount rate. And one thing that I like to do is I can either use the amount that I've put in the alimony to use, and we'll update that. So this is the present value of that stream of 10 years of alimony at $723 a month. Now, if I want to explore a different interest rate, maybe I want to look at what's a 3% rate. It will give me two different numbers if I use two different rates. So you can look at the various implications of the discount rate. We again are using a 20-year T-bond rate. And as we know, this is a rate that is currently changing by the minute, practically, changing frequently. So the cloud version will always be up to date. The desktop version, we update regularly, but it would depend on when you last updated your program, but you can always play with it and put in a different rate of return. Okay, so we've talked about property, we've talked about alimony, and we are almost out of time. There was one question about overtime. I do not know the answer to your question, Tracy, but I will find out and get that to you. My guess is we have an FAQ on that on our website, so you may want to check that out and search for it. And if not, I will look at it and get that information. Just not familiar with Connecticut as much as I am with other states. Okay, so that is our program. I'm sorry I started late.